A landmark judgment by Nigeria's Supreme Court affirms the financial autonomy of the country's 774 local government areas. How will this improve spending on social infrastructure like schools, hospitals, and more? Good morning. It's another power-packed episode of Business Week on your favorite Pan-African news channel. In our review of the world this week, ratings agency Moody's cuts Kenya's credit rating. South African industrial gas users take supplies into their own hands. Nigeria's FX reserves top $35 billion for the first time in a year, while we speak to a tech founder on new innovation that could help central banks regulate fintechs better. I'm here to help you catch up as always. If you couldn't keep up, I'm Rolake Akikugbe-Filani. As always, we'll take a look at global energy commodities, and all the main commodities looked pretty good at the end of trading on Friday. Brent was up by 18 basis points to $85 per barrel. Same with WTI, up by 34 basis points. Probably riding on the back of news of improved consumer sentiment around demand following those falling inflation figures in the US, and we'll talk about that a bit later in the show. Natural gas also did pretty well, as did RBOB gasoline. Let's take a look at global equities around the world, starting of course with Nigeria and the all share index down from 100,000 points last week to 99,671.28 to end the week by 20 basis points up. A little over 400 million shares traded with a value of 6.82 billion naira, and market cap ending the week at 56.4 trillion naira. Let's take a look at African equities. Pretty good look across the board, starting with the South Africa Stock Exchange in Johannesburg. It was up by 0.73%. Ghana, Accra, also looking really good, primarily driven there, I understand, by mining stocks. It was up by 3.08%. Nairobi, not too bad, given all the issues around there. Would have seen the Moody's downgrade of Kenya's credit rating, but markets weren't too rattled, obviously, because the Nairobi Stock Exchange was up by 32 basis points, and of course Casablanca was up by 62 basis points. Let's take a look at Europe for this week. Clean sweep of the bulls there at the end of trading on Friday. Euro Stock 600 was up by 88 basis points, and all the other major indices in Europe followed suit. FTSE 100 in London, DAX Germany, Spain, IBEX, and of course Paris was also up. Let's take a look at my top business picks for the week. So starting, of course, with the landmark ruling by Nigeria's Supreme Court affirming the rights of financial autonomy for local government areas. Nigeria has 774 local government areas. And before that ruling, the monthly FAC allocations from the government to the subnationals was being paid into a joint account of state governments and local governments. But Supreme Court has said those monies now will be going directly to local governments. The expectation is that this new era will mean more autonomy for local governments to spend directly and improve social infrastructure at the local level. It's quite a big deal for Nigeria, this news. We'll be following it very closely and talking about it a bit later in the show. We also have EU tariffs, which have apparently hit China's electric car exports for June. The exports fell by 15.2%, down from the previous month, although still pretty robust compared to a year ago. If you recall, the EU had imposed and increased tariffs on electric vehicles, including European-made, China-made European cars such as Tesla, which had been hit by about 37% in tariffs. And for every 10% increase in tariffs there are on these EVs, the cost for these EV makers in China rises by about $1 billion. So clearly, EU tariffs now having an impact on Chinese electric vehicle exports. Of course, the EU claims that China has been unfairly benefiting from Chinese government subsidies on electric car manufacturing, which obviously was a problem from the EU perspective. Tariffs now hitting China. We'll see how that story evolves. But worth bearing in mind that sales of EVs in China haven't been as affected as they have since 2022 as a result of COVID restrictions in that country. So interesting development there. Saudi Aramco, the world's biggest national oil company, has returned to the bond markets. It's issued $6 billion worth of bonds in 3 tranches, I believe $2 billion, $2 billion, $2 billion, with different maturities, one 10 years and 30 years. then 40 years. 40 years from now takes us to about 2064, I think. And of course, each of those bonds attracting premiums over US Treasuries of up to 1.5%. Of course, Saudi Aramco is a major cash cow for the Saudi Arabian government, which has been trying to diversify away from oil and invest in new sectors. Interestingly, state-owned oil companies, state-owned companies in general in emerging markets, have issued in the first half of this year alone a little over $12.4 billion worth of dollar-denominated bonds. Are we going to see a return to global bond markets? Of course, the initial launch of that bond saw the bonds oversubscribed by up to $31.5 billion. So huge demand and appetite for Saudi state-owned corporate issuances there. Good news for the country. Moody's has unfortunately downgraded Kenya from B1 to CAA1. So Kenya has further slipped down in the junk status rankings, essentially, which means it would signal to the markets that its local and foreign denominated debt obligations are troubled and could potentially move into default phase. You would recall that William Ruto in Kenya had suspended the implementation of the finance bill, which would have increased taxes and allowed the country to raise up to $3 billion in additional revenues. Now, Moody's has read that as signs that the country may be entering troubled fiscal waters and has downgraded Kenya to very high risk status in terms of potential sovereign default. Not good news for Kenya there. We'll see what the other ratings agency says. The government obviously has to find alternative ways to deal with its economic challenges. And finally, South Africa's industrial gas users, companies like ArcelorMittal, Coca-Cola, are now thinking of taking their own supply destiny into their own hands because a major supplier of gas, Sasol, which pipes gas from Mozambique into South Africa, is saying it will stop supplies in 2026. Now, so many of these industrial gas users are now looking at a non-exclusive joint agreement that would see several of these industrial gas users, manufacturing companies, industrial giants form a new venture to create a company that would then supply its own gas and potentially secure their supplies for their operations. South Africa obviously has a major gas industrial policy which the government is pursuing. That's it for my top picks from around the world this week. So we'll take a look at news from around the world, starting in the US, where inflation cooled in June for a third straight month, a sign that the worst price spike in 4 decades is steadily fading and may soon usher in interest rate cuts by the Fed. In a better-than-expected report, prices were up 3% in June, cooler than the 3.3 annual rate in May. The latest inflation readings will likely help convince the Fed's policymakers that inflation is returning to its 2% target. According to stats released in China on Wednesday, producer prices decreased as predicted, but consumer price inflation in China increased by 0.2% in June compared to the same month last year, below expectations. A Reuters poll predicted that China's consumer price index will increase by 0.4% in June compared to the previous year. While prices have stayed high in large nations like the US, China's limited domestic demand has kept inflation low. Back here in Nigeria, as of July 8, 2024, Nigeria's external reserves climbed to $35.05 billion. The external reserve numbers from the central bank support this. The reserves were reported to be at their greatest point since May 30 last year, when they were valued at $35.09 billion. This is the first time Nigeria's reserves have surpassed the $35 billion mark since President Bola Tinubu became president. Still in Nigeria, as the country continues to debate the creation of a new livestock ministry, the Minister of Agriculture and Food Security, Senator Abubakar Kyari, announced new measures aimed at reducing food prices within 180 days. Nigerian Minister of Agric shared the details on Wednesday in a statement on X, outlining a series of initiatives that will be rolled out to address the escalating food costs, which include a 150-day duty-free import window for food commodities and the suspension of duties, tariffs, and taxes for the importation of certain food commodities through land and sea borders. Still on Nigeria, according to data from the central bank, in May 2024, credit to the government increased by 8.4 trillion naira, far outpacing the growth of credit in the private sector by a factor of 6 during the same time frame. This is in line with the central bank's most recent money and credit statistics data for May. As the government continues to rely on local borrowing to cover its expenditures, the CBN data also reveals that credit to the government accounted for 86% of fresh domestic credit. Nigeria's Supreme Court on Thursday this week ordered governors of the country's 36 states to henceforth steer clear of funds meant for the country's local government administrations. The Apex Court says the control of funds of the local government councils by the states is unconstitutional. The judgment is in respect of a lawsuit instituted by the government through the Attorney General of the Federation against governors, in a move to ensure full independence of the local government councils from the control of state governments who until now control the funds, as well as constitute caretaker committees to run the affairs of the third tier of government. Now for some Nigerian banking sector news. According to Guarantee Trust Holding Company PLC, GTCO, the goal of its planned 400 billion naira capital raise through a public offering is to strengthen its capital structure and broaden its global reach. GTCO Group Managing Director Segun Agbaje revealed the group's intention to issue 9 billion ordinary shares of 50 kobo each at an offer price of 44 naira 0.5 per share on the Nigeria Stock Exchange during his speech at the Facts Behind the Offer presentation. He also stated that achieving the government's aspiration of a $1 trillion economy would not be possible without a recapitalization of banks. Still on banking, earlier this week, Access Holdings PLC also announced the launch of its 351 billion naira rights issue. According to the acting group CEO, Bolaji Agbede, the rights issue is part of the group's capital raising program, which aims to raise up to $1.5 billion, and its purpose is to support the group's ongoing working capital needs, including organic growth funding for its banking and non-banking subsidiaries, and to strengthen its financial footing. Finally, on banking again, Zenith Bank PLC held its Capital Markets Day on Thursday with stakeholders including investors, shareholders, analysts and stockbrokers in attendance. During the Capital Markets Day, Group Managing Director and CEO Dr. Adora Umeoji stated that the group was looking to expand its geographic footprint into the Francophone Africa region, diversify its business verticals with the forthcoming holdco structure, and had filed for regulatory approval to launch its capital raise as part of the CBN directive on recapitalization. The group CFO, Dr. Mukta Adam, also stated that the group was on track to hit 1 trillion naira in profit for 2024. Well, that's it for our top global stories.